Recently, the ETH I bought has doubled from just over $1,000 all the way up to more than 4,000. Hey guys, I'm Hao Yu, a Chinese engineer who's passionate about finance. Today, I want to share with you why I invested in ETH and also why it suddenly pumped so hard. Back in July, when ETH started taking off, a lot of people on exchanges were asking, what the heck is going on with Ethereum? But the truth is, this really didn't come out of nowhere. It's been building up for a long time. People just didn't notice the setup beforehand. In the first half of this year, Bitcoin went up about 13%, becoming the main focus of the market. Meanwhile, ETH dropped by 25%. As a result, most of the market's attention went to Bitcoin, and ETH ended up being left behind. At one point, people were even trashing ETH, calling it a psychic, saying it was just the most expensive stablecoin on-chain, while the altcoins were flying. And that felt strange to many people, because ETH is supposed to be the real deal, the backbone of the crypto world. Think about it. DeFi, NFTs, Layer 2s, stablecoins, all of this stuff is built on Ethereum. Logically, it should be the one going up with the most conviction. So why didn't it? Let's talk about ETFs real quick. An ETF is basically packaging an asset into a fund share. That way, investors don't need to go out and buy the asset directly. They can just buy the ETF, like buying a stock. And it's the same as indirectly holding ETH. But for an ETF to actually trade on the market, it has to be approved by the SEC, basically the US financial regulator. In other words, it's like getting an official stamp of approval, a compliance pass from the government. That's not just about making trading easier, it's about legitimacy. Now, Ethereum ETFs were already approved back in 2024, but institutions need time to run the numbers, adjust portfolios, and build positions. In addition, through late 2024 and early 2025, the macro environment wasn't great. High interest rates, high liquidity, so ETH just kind of dragged along without moving much. Then in July this year, things finally shifted. Institutional buying started accelerating. That's when the market realized, okay, ETH is now officially recognized as a core asset by big money, and all that energy building up for almost a year, it suddenly exploded. And it wasn't just retail buying ETH. Even BlackRock, the world's biggest asset manager, started stacking ETH aggressively. For context, BlackRock is basically the godfather of asset management, with more than $10 trillion under management, serving banks, insurers, sovereign funds, and all kinds of heavyweight clients. According to CoinWorld, back in July 2024, BlackRock bought about 547 million worth of ETH. That's actually 50 million more than what they put into Bitcoin. And if you look at it in terms of units, that's more than 5 times as much ETH as BTC. The thing is, BlackRock doesn't just throw money around. Every move they make, every allocation is backed by layers of risk models and serious analysis. So when they step in, it basically means this asset has passed institutional level due diligence. And that tells us something big. For these institutions, ETH isn't just a side bet. They see it as strategic. Some even think ETH could become more important than BTC in the future, something worth holding for the long haul. Now let me tell you about my own play. I actually bought ETH before the bull market, when the market was super quiet. Crypto was pretty dull back then. Not much hype, not much confidence, barely any noise. I just quietly picked some up and let it sit. Fast forward to now, ETH has pumped, but I'm not selling. Why? Because when I bought ETH, it wasn't for a quick flip. My plan from day one was to treat it as a long-term core position. When I first started buying Bitcoin and Ethereum, almost none of my colleagues or friends around me were investing in crypto. In mainland China, investing in cryptocurrency is not encouraged. And back then, there were very few investment guides about crypto online. But in the past couple of weeks, I've noticed that there's been a lot more content about blockchain and crypto on social media. So when I told people that I bought ETH, no one supported me except my husband and my kid. Most people thought crypto was unreliable, too risky, even kind of fake. They prefer to spend their spare money on Chinese stocks or just save up to buy a house. From time to time, I would also see videos on Chinese social media saying things like Bitcoin is just hype or it's basically worthless. But I didn't blindly believe that. Instead, I chose to study and learn by myself. I also watch a lot of English videos about crypto on YouTube. That's when I realized there's a big difference in attitude between ordinary people in China and in the US. For example, in the US, by 2025, about 28% of adults hold cryptocurrency. But in China, there isn't any reliable public data showing such a high adoption rate. Most people, because of policy and limited information, are still cautious or even negative about it. For me, I was lucky enough to come across blockchain and cryptocurrency content. The more I researched, the more confident I became in crypto investing. And I was deeply attracted to the idea of decentralization. That's why I decided to put my real money into the leaders of this space, Bitcoin and Ethereum. Of course, back then I also bought a few smaller coins like Virtual, AIXBT, Doge. They went up too, and I've already sold most of them when the bull run kicked off. So why I sell the small caps but not ETH? It's simple. I don't trust small caps long term. Their prices are mostly short-term games, hype, sentiment, and money flows. They pump when the market's hot and money pours in, but that's not sustainable. ETH is the foundation of the whole Ethereum ecosystem, a core piece of blockchain infrastructure. Here's an analogy. Small coins are like running a street store at a busy market. You make money when the crowd is hot, but when the crowd's gone, so is your business. ETH, on the other hand, is like owning a prime storefront in a solid location. It may not always have record-breaking sales every day, but is stable, resilient, and built to last. That's why I'm fine trading in and out of small coins. They're hot snacks, good for quick profits. But ETH is like long-term food storage in the fridge. It's the ballast of my whole portfolio. I'm not shaken out just because of a dip. The fundamentals are clear. ETH isn't pumping because of hype or memes. It's climbing because of strong structural reasons. And when it comes to the next wave of institutional allocation, ETH is basically the top choice after Bitcoin. A lot of people call Bitcoin digital gold and Ethereum digital oil. Why? Think of ETH as the infrastructure of the entire blockchain road, kind of like the internet's infrastructure. Bitcoin is mostly a store of value, but ETH is what powers all the action. It's the base layer for everything being built. NFTs, DeFi, Layer 2, it all runs on ETH. Once ETFs open that regulatory door, the money coming in isn't just quick, speculative money. It's stable, long-term capital, the kind of money that sticks around. So you're not gonna see ETH do some crazy 10x in a month like random altcoins. Instead, it climbs steadily, breaking resistance one step at a time, slowly leaving the rest of the market behind. And here's another reason I'm bullish. ETH never stopped evolving. It's been upgrading non-stop. First, the merge. It switched from mining to staking. That cut energy use by more than 99%. Super green. And institutions love that. Second, EIP 1559. Every transaction burns a little ETH. The busier the network, the more ETH gets burned. That means supply is shrinking, and most of the time, ETH is deflationary, the opposite of fiat money. For instance, in 2021, over 2 million ETH were burned, with the network continuing to grow. By 2025, the total supply of ETH has reached around 120 million, with a substantial portion burned through high network activity. This means that while ETH is still being issued, the rate of increase has slowed down compared to the past, bringing it closer to a deflationary model. Third, staking rewards. If you hold ETH, you can stake it and earn around 3 to 5% a year, kind of like a crypto version of a saving account, though the rate moves comes with network activity. Fourth, the layer 2 boom. Tons of L2 projects are building on Ethereum, but at the end of the day, they all set back to ETH. The more activity, the more demand for ETH. You can picture Ethereum like a giant, decentralized supermarket. Everyone comes here to set up shop, do business, move value around, and ETH is the checkout card. You literally can't operate in this system without it. That's why ETH is the core chip, the must-have. The more it gets used, the more irreplaceable it becomes, and the higher its value goes. So ETH doesn't live off hype. It lives off being tied to the very foundation of the entire industry. Now, the big question is it still a good time to buy? It depends. If you are a short-term trader looking for a quick flip, you have to make your own call. ETH at $4,000 is already at historic highs. But if you are thinking about building a long-term position, I would say this. ETH's fundamentals are clearer than ever. The ecosystem is stronger than ever. And institutions now have a ledger channel to buy in. With the SEC greenlighting ETFs, ETH isn't just the second biggest crypto anymore. It's officially stepping into the global finance system as a recognized asset. Sure, you can wait for a pullback, but for assets like this, once they've locked in that kind of legitimacy, they don't always fall back much. That's why dollar cost averaging is a solid option. Buy small, buy often, spread out the risk. Understand what you are buying, then hold it. Patience is key. The market loves to shake people out, but in the end, time rewards the few who can hold on. And that's it for today. I truly hope everyone watching this video makes more money. See you next time.